All right, it is time that you pay yourself. Don't you agree? I get this question all the time. What is the best way to pay myself? How exactly do I do that? How do I move money out of my business to my personal life? Well, let's cover that right now. So on the board here, you've got my best rendition of a drawing, which is your business here, dollar sign, dollar sign, dollar sign. This is you personally, and then I'll talk about this whole new opportunity thing in a second. So to get money from your business to yourself personally, there are essentially three ways to do it. Way number one, and that is the doorway here. Way number one is to pay yourself as a W-2 employee of your own organization. You're taking a salary. It's administered through a payroll processing system, and that can bring money out of the company to you. Now, of course, like any other W-2 employee, you're going to be paying Social Security tax and Medicare, and all that's going to be taken out of your paycheck through the payroll processing company, and you personally then are going to get the net. Now, in order to do that, it's important that you consult with your CPA and that you consult with your attorney to make sure you have the right entity type set up. And there's some considerations here because you don't want too much money coming out via W-2 and you don't want too little either. The IRS, as a matter of fact, for S corporations says that your pay needs to be reasonable, right? And what are other industries paying for similar goods and services? So consult with your CPA about what is reasonable because there's another doorway that you can get money out of your business. Doorway number two, and we're going to call this just an owner distribution. This is literally you transferring money from your business account to your personal account. That is an owner distribution. You as the owner are distributing cash out of the business to yourself personally. Complete legit way to do it. Many small business owners, that's all they do, right? So take a look at that as a possibility. Now, calibrating how much comes out as W-2 and how much comes out as owner distribution really depends a lot on the entity type you have and your overall tax picture. So this does require a conversation with your CPA so that you're getting that mix right. If, for example, you don't distribute out enough via W-2, the IRS can say, hey, the owner distributions were too large, you need to put more in W-2, and then you're going to owe all the back payroll taxes and stuff. So getting that right is really important. Now, there's some other reasons to have money coming out through a W-2, and that would be what kind of retirement plan do you have set up in your organization? There's a whole world around retirement plans. It's a different module, but how much money comes out as a W-2 will impact how much money you can contribute into your overall retirement plan. Because some people are like, why should I pay any money in a W-2? Well, the retirement plan consideration is one of them. The entity type consideration is another, and overall tax management is a third. So way number one is through a W-2 vehicle, a salary, and then number two is an owner distribution. What about number three? Well, number three would be a loan. You can have the business lend you money. Now, officially, it should be an actual loan, so you should paper it with something. It should have some terms, and you should be paying it back to the business, right? So if you don't, and it's not really a loan, it's really an owner distribution, you're not going to be able to get away with that over time. So a loan should be truly a loan that you're going to be paying back to the business. But those are predominantly the three ways to get money out of the business: a W-2, an owner distribution, or a loan. All right. Now, what's this thing over here, this new opportunity? I wanted to add this because what I'm noticing a lot is when somebody has a new opportunity, a new business, for example, to invest in, or a piece of real estate they want to buy, I'm seeing people actually transfer money from the business over to this new opportunity. The only reason you would do that is if the business is going to own the new opportunity, right? And in most cases, you don't want the business, if you have a sales business, to own the piece of real estate or to own another business. There are liability issues you should talk to an attorney about. There are tax implications to the new asset being assigned to the business. So the proper way to do it, if you have something new you want to buy, you distribute money out of your business to yourself personally, and then you personally will fund the new opportunity investment and buy that asset, whatever that happens to be. That's important. If you have money moving all over this board and you're not thinking, is this a personal asset that I need to buy, therefore it comes out of the business to me personally and over to the asset? Or is this a business asset? Make sure that the money is flowing in the correct direction based on who is actually going to own the asset. Now, something else I get asked, which is, well, then, like, where do I pay my taxes? Do I pay the taxes out of the business, or do I pay my taxes out of my own personal books? Well, consult with your CPA about what your situation is. Though in most cases, for most real estate sales practices, the tax is owed personally. And so you distribute money out of the business to yourself, and then you write a check to the IRS. Now, there are some distinctions around C corporations and S corporations that make that a little bit different. So double check your particular situation. But the whole point here is know who needs to be responsible for moving the money where. Don't just move it all over the board without understanding that. And if you do that, your books are going to be a lot cleaner. Speaking of your books, where do you book all this stuff? Well, if it is a W-2 payment to yourself, then that is booked under compensation, as with anybody else's compensation in the organization. It's on your profit and loss statement. Owner distributions and loans, however, do not appear on the P&L in any of those charts. They appear on the balance sheet, right? A loan would be an asset on the balance sheet because then the business would be collecting that money back, right? It's not a loan from the business is making the loan, which makes it an asset to the business. If it's an owner distribution, there's a line item in the balance sheet for an owner distribution. And most of the time, the balance sheet gets quite complicated. I'd recommend you have an accountant who's managing the balance sheet for you. But you as the owner, when you're looking for this stuff, you're going to see your compensation on the P&L, but your W-2 compensation, but any owner distributions or loans, that's going to be on the balance sheet. So if you're sometimes wondering, like, the P&L shows one number in net profitability, but the cash in the bank is an entirely different number. Why is that? That used to drive me crazy. Well, it's probably because you distributed money out of the business, meaning you transferred cash from the business account to the personal account. That's not showing up on the P&L. That is showing up on the balance sheet, and that's where that would be recorded if you're tracking your balance sheet correctly, which I highly recommend you do, and you do that on a quarterly basis. All right, so make sure you're paying yourself. That's important. Set that up every 2 weeks so you get a good, consistent W-2, and then I recommend you do an owner distribution on a quarterly basis. That allows you to manage cash flow, manage reserves, and not get high on a real big sale and sending all the money out of the business. Keep it in the business on a quarterly basis and make a determination of how much of an owner distribution you should execute in that particular situation.